Everyone, and happy Election Day. Welcome to our Public Sector Quarterly Performance Review webcast, highlighting the results from our recent Public Sector IT Services benchmark. My name is Allison Crawford, and I will be your host for today's session. Technology Business Research's focus is to provide business research to accelerate our customer success, and this webinar is a part of these ongoing efforts to find new ways to support your business, help you get the most out of your research investment. We'll highlight during the session the public sector is in a state of transition, and many suppliers are struggling to determine how to move forward in such a challenging market. Is conducting research in this area to supply much-needed answers and help turn the insights from our cutting-edge research into sound advice. The objective of our research is consistent, to provide actionable insight into the market and competitive strategies that translate into competitive advantage for our clients. In the next 30 minutes, Senior Analyst John Caucis will delve into trends driving the results featured in this quarter's benchmark, followed Q&A of these trends and how they will affect you. To pass this over to John, there are a few logistics I'd like to cover. First, we will be recording today's session and posting it on our YouTube site, TBR channel. We visit our channel to watch this presentation or any of the others we've posted. Second, we'd like to hear your opinions and thoughts on the material we're presenting. Please send any questions or comments to the Q&A function or the chat function. John will address them at the end of the presentation, or if you'd like to set up a client inquiry for more detailed discussion, please reach out directly to John at the end of the webinar with the CC to your account executive to set up that discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You will find the slides, as well as their thought leadership pieces, other decks, and commentaries on SlideShare at www.slider.net/TBR_market_insight. Now I introduce John Caucis, Senior Analyst and Public Sector Practice Manager. John has been analyzing the market for the past 10 years and is TBR's resident expert in the government sector. John's research has been critical in the planning of black hat strategies for several of our clients, and his insight into the performance of the government vendors has enabled several of our clients to identify new opportunities and revenue streams. And let me hand this over to John.
Awesome. Everyone, and welcome to Technology Business Research's Public Sector IT Services Benchmark Review. My name is John Caucis, Senior Analyst and Manager of the Public Sector IT Services practice here at TBR, and I will be the presenter for today's session. I've been an analyst with TBR since 2001 and have directed the Public Sector IT Services practice since 2008. Within the Public Sector IT Services market is to provide company-centric research to accelerate our customer success. The area we'll be reviewing today comes directly from TBR's Public Sector IT Services Vendor Benchmark Report for the second calendar quarter of 2012, otherwise as 2Q12. This report includes information on vendor strategies, actions, and key developments during the quarter, a line acquisition activity, and overall fiscal and business line performance. The Public Sector IT Services team delivers is invaluable to any vendor looking to expand their footprint or compete more effectively in the global public sector IT services market. We are excited today to present our findings from our most recent benchmark study, and we look forward to receiving your feedback and responding to your questions about the information presented today. Before we begin, I would like to provide some background information for the audience regarding our research approach and methodology. We, on an ongoing basis, 20 vendors in our public sector IT services practice. Of the 20, we quarterly and semi-annual reports on 16 companies. Specifically, we report on, quote, non-government-centric companies, unquote. That is, companies' primary customers are government or other non-commercial entities. We'll track the public sector activities of 7 lead IT services companies who are operating predominantly in the commercial sector, have enough play in the public sector to warrant coverage by TBR. We include quantitative and qualitative analyses of 4 additional government-centric firms in the quarterly benchmark report. We do not publish syndicated reports on these firms. As vendors are also leading government IT services contractors, TBR included them to provide a broader view of the public sector and the market forces impacting the government-centric IT services firms. Let's begin with a summary of the key takeaways from our public sector IT services research in the second calendar quarter of 2012. Top players in the public sector IT services market showed that the majority of vendors were impacted to one extent or another by the headwinds in the federal IT contracting environment and the prospect that these conditions will linger through 2013, perhaps being exacerbated in early 2013. The sequestration process is triggered in the budget process. We will discuss today relates to the current conditions in the public IT services market environment and their effect on companies' fiscal performance. Across the board, the vendors we followed reported their fiscal results were impacted by the ongoing tumultuous federal budget process, characterized as elongated business development cycles and the ongoing paring down of defense-related outlays. So let's take a moment to orient you to the graph on this slide. The blue line represents the average year-to-year growth for the 2Q12 quarter for all 20 firms in the public sector IT services benchmark study. The red represents the average trailing 12-month year-to-year revenue growth for the 20 firms in the benchmark study. The key from this graphic is how it illustrates the ongoing slowdown in public sector IT spending, primarily in the U.S. federal sector, but also in U.S. state and local government sectors. Are gaining traction in international public sector markets, which we will discuss on a later slide, but growth received for most vendors was not sufficient to offset the challenges they face in the U.S. market. In 2011, the federal government has adopted more stringent austerity measures in the budget process and defense spending, ramped down operations in Iraq and Afghanistan, still driving down growth in IT spending. The federal IT budget in fiscal 2012 was approximately $79.7 billion, down marginally from total federal IT outlays of $8.2 billion in fiscal 11. Federal IT spending for fiscal 13 is expected to be down again, a trend that we will cover later in this presentation, along with vendor expectations for 2013. As many vendors have experienced accelerating top-line growth since the beginning of 2011, and especially during the first half of 2012. In calendar quarter of 2012, 15 of the 20 vendors in TBR's public sector benchmark study saw their top line contract from the same period in 2011, including 11 of the 13 government-focused contractors. We'll discuss the market growth leaders later in today's presentation. And we'll move to the next slide. In fact, we called out a moment ago, 11 of the 13 government-focused IT services firms in the benchmark study reported a year-to-year contraction in their respective revenue. Top-line contraction varied widely across these companies, illustrated by the three vendors we have highlighted on this slide. First, Hamilton, whose contraction was marginal in comparison to most of its peers in 2Q12. Were it not the recent divestiture of its transportation business, Booz Allen would have recorded positive top-line growth in the quarter, as growth was realized across its primary defense, intelligence, and civil business groups. Rayon's IT services business, which encompasses activities of three business lines within the company: Intelligence and Information Systems Group, Centric Systems Group, and its Technical Services Unit, post-consolidated rate of top-line contraction, generally in line with most of its government-centric IT services peers. Of the 11 government-focused IT services vendors, we had top-line contraction in the mid to upper digits in 2Q12. Most of Raytheon's peers also cited longer sales cycles, low volumes, that concluded without immediate replacement as the primary reasons behind the revenue decline. In addition, Ray and several of its competitors also reported gaining traction in areas of cybersecurity, new classified awards in the intelligence space, though this is generally not enough to offset the broader decline in IT services demand. Finally, made among a small group of government-centric IT services firms to a double-digit top-line contraction in 2Q12. Fell in 2Q12 due to the ramp down of operations in and new awards that primarily impacted C4ISR, that is, command control, communications, computers, intelligence, surveillance, and reconnaissance business. We set the growth in Mantech's from its intelligence, cybersecurity, and healthcare IT activities. We'll move to the next key finding from the Public Sector Benchmark Report. Primary takeaway from the benchmark study were vendor actions taken in response to the current market conditions. In general, vendors conceded top-line growth and are instead taking action to preserve profitability as well as align their services and solutions portfolios for areas still receiving funding priorities. Teams observed vendors expanding their portfolios into new areas as well as expanding their industry and or geographic focus in pursuit of new revenue streams. Let me orient the audience to the graphic on this page. This is a illustration of the 20 firms in the quarterly benchmark study and position against one another in terms of top-line growth, market performance at the operating margin level, and the respective size of their revenue base. This graphic also calls out which are growing the fastest and which are most profitable. The axis represents absolute dollar growth for vendors' public sector IT services business. The y-axis represents reported or estimated operating margin for each vendor's public IT services business. And the bubble represents the volume of revenue generated in the quarter through public sector IT services sales. We've plotted the average year-to-year growth rate for each of the 20 firms, -5.4%, which is plotted using the vertical dashed red line, while the average operating margin of 9.3% is plotted a horizontal dashed red line. Growth shared many of the same drivers for their revenue performance, including investments to expand outside the federal sector in areas such as healthcare IT or even commercial markets, where capabilities, cybersecurity are in demand, industries such as financial services and other sectors. Gaining traction in the state and local government space. Conversely, actions did not appear to have a significant impact on the expansion rates for the vendors in 2Q12, and those vendors most active in mergers and acquisitions over the last year did not have a strong enough inorganic boost to their top line to offset the market headwinds to growth. Profitability also many of the same drivers for their margin performance, including both organic and inorganic, that have higher value offerings to their portfolios, as well as strong contract execution and implementation of internal controls on employee costs and operating expenses. We'll now discuss the top 3 revenue growth as well as operating margin leaders in greater detail on the following 2 slides. This year-to-year growth during 2Q12 was turned in by public sector practice. Estimates realized an 11.3% increase in its top line over the same quarter in 2011. It gained traction in the healthcare IT services space, both in the U.S. and abroad. Also believes that the recent reorganization of the leadership and management of Accenture's U.S. federal practice has enabled the firm to secure a number of awards for IT modernization work, cybersecurity, and operations support for its federal clientele. AIC, who had a top-line growth rate of 9.7% in 2Q12, which stems from the firm's focus on the C4ISR market, cybersecurity, as well as solutions for the energy sector and the healthcare IT sector. Largest revenue basis in the public sector IT services benchmark study, we believe SE has proven itself to be a nimble organization with the shifting of its portfolio focus to the aforementioned system solution areas. And that we observe already underway as the federal IT services sector slid into recession in 2011. Recent acquisitions of Max IT and its consulting services also case the first effect identification of the healthcare IT market as a strategic growth priority. Moving to the third vendor, Xerox Services, whose Q12 was driven primarily by new signings in the healthcare as well as state and local markets. Xerox Services to maintain steady during the year of about 5% in Q12. Xerox also leveraged acquisitions and strategic partnerships to enhance its offerings, and the healthcare expertise of its recently acquired ACS business to 8-level Health Information Exchange Adoption Awards in states including Florida, Nevada, and New Mexico. Federal level, an award with the National Institutes of Health and Xerox Services footprint in the federal space. Outside the health IT space, we believe Xerox Services document and IT outsourcing businesses also secured public sector awards, such as 10-year engagement recently won to IT systems for the state of Texas. And that doesn't appear on this particular page. We would also like to take a moment to mention of Boeing's Global Services and Support Group. As not a part of nor is it part of our syndicated coverage, but we have included beginning quarter as part of as one of the vendors that we report on from a qualitative and quantitative analysis in the benchmark report, and the top performing companies in terms of growth. Boeing was able to realize double-digit growth in Q12. Integrated logistics business logged higher volumes, in addition to winning new awards with international and commercial customers. Next slide, we will discuss the operating profitability leaders in Q12 and the drivers of their margin performance. Untitled Services, the first vendor on the list, contain this portfolio of high-value solutions, both organically and through acquisition, during Q12. That supplemented the firm's ongoing efforts to maximize productivity and operating efficiencies and automation of service delivery in IBM to their top spot amongst the market leaders in study in Q12. Along one of the growth leaders, Accenture posted the second highest operating margin result during the quarter, which we believe stems from its ongoing efforts to reduce employee and operating expenses and streamline its organization. Finally, the consolidated operating margin of Northrop Grumman's Information and Technical Services groups was among the highest of the government-centric firms, which lead to Northrop's efforts to win its portfolio in higher value service areas such as C4ISR, cybersecurity, and training solutions, with doing concurrently with efforts to contract delivery, improving contract delivery on fixed price engagements. With that, I'll move to the final key takeaway from the quarterly public sector benchmark report. From the benchmark study today relates to vendors' outlook for the remainder of 2012, as some early expectations regarding 2013, in particular regarding the potential for sequestration. To orient you to this slide, here we have illustrated the projected top-line growth for the 20 vendors for their full year for 2012 revenue. All most vendors have guided for top-line growth that during the first half of 2012 to continue at a similar pace in the second half of the year. Most vendors, in fact 13 of the 20 in the benchmark study, have guided for 2012 sales to differ from 2011. 2012 will be the second consecutive year of contracting sales. In fact, 7 of the 20 vendors in the benchmark study do expect their top-line growth in 2012 will actually be positive. And less the drivers expected top-line growth for 3 of these companies momentarily. Noting these firms were also among the performers in terms of top-line growth during the quarter. The firms expect low single-digit growth in 2012, and they happen to be government-centric others. CI, Booz Hamilton, Boeing Services and Support, and IT. First, ACI, which continued traction with its intelligence and healthcare IT services businesses through the remainder of the year. Hamilton also expects growth in the intelligence sector in a part of 2012, which is to augment with international expansion effort in the Middle East. Position of the Systems and Engineering Support Division of NC will not begin to accrete to its top line until April of 2013. Services Division continue to expand in commercial and international markets, while IT will look in healthcare IT as well as cross-sell of its services to fast-growing communications client base. The study all expect the conditions, their growth efforts during the early part of 2012, those conditions being turmoil, austerity in IT and other spending, defense, and the continued drawdown of operations in Iraq and Afghanistan will remain the primary headwinds to growth for the remainder of the year. As a moment ago, TBR expects firms, Accenture, Xerox Services, and SAIC to post top-line revenue growth in 2012 in the single-digit range. The leading growth firm during the quarter, during 2Q12, is predicted to finish 2012 altogether as the growth leader as well. TBR's momentum in the health IT services space will be sustained, while it lands an increasing number of awards in the civilian space within the federal government. And as alluded to earlier, TBR believes that Accenture's reorganization of its federal practice will begin to gain traction and will enable the firm to realize the projected growth for the year. Expects Xerox Services will realize an acceleration in its public sector growth rate in the latter half of 2012 as recent deal wins ramp up and the firm does secure new awards with state and local governments. Sourcing solutions can be well received. And then the recent announcement that SAIC plans to split its business into 2 independent units over the course of the next year, I expect that this will impact its 2012 top-line growth. We do SAIC to leverage its recently acquired consulting and systems integration capabilities in the care IT space, secure new awards with commercial and federal clients in that is electronic health record related engagements, as well as to sustain a moderate pace of revenue expansion throughout the remainder of the year. I'd like to make a few comments about the outlook for 2013. While as of the close of the second calendar quarter of 2012 has offered guidance for the upcoming year, either for revenue growth or margin margin performance, estimated that 2015 will be another challenging year. It's due in part to the combination of the following contract trends, such as fewer larger awards being made in favor of more smaller contracts that have short time frames, the continued trend towards fixed price deal structuring, the pressure on vendors to split up work of smaller partners, as well as just an overall increasingly competitive landscape, and then the ongoing trend of low price, technically acceptable contracting. Federal IT spending to contract in 2013 is most certainly another factor driving vendor expectations for the upcoming year. The 2013 federal budget IT request is of $78.9 billion, which represents approximately a 1% contraction from fiscal 12. Surrounding that is the potential for sequestration, which, aside from the impact of the automatic across-the-board budget cuts, proportionally hit federal contractors as the cuts themselves fall proportionally on technology versus people. Also severely impact contractor backlogs if are either deobligated after these steep budget cuts. The sequestration could shave another 7 and 8% from the post 2013 federal IT budget. The threat of sequestration, most vendors have said that they're making preparations for the various potential scenarios and are hoping contingency plans, whatever they might be. They have their concerns with their federal counterparts that the sequestration process would have consequences for national security, for the myriad of interests that are connected to the defense industry. As well, on 2Q12, vendor reported that they had not received guidance from them on how sequestration would be implemented, further clouding the outlook for the upcoming year. Mostly, however, the sequestration would, without doubt, result in sharply lower revenues, margin performance, and generation. What kind of actions do we expect vendors will take to navigate through the IT contracting environment? First of all, we see vendors doubling down on meeting customers' mission requirements. And from a key perspective, this is increasingly going to mean not just managing infrastructure, but managing data, as well as increasing efficiencies, enhancing enterprise services, and accelerating innovation. Focus on enhancing operational efficiency and contract performance will intensify. Vendors increasingly looking to developing long-term teaming and subcontracting relationships. The strong teams will be one of the primary drivers of success. So look at low-price, technically acceptable contracting trend as an opportunity for new and innovative solutions, while others fear that this trend will lead a wave of failed projects down the road. However, will continue with their business development activities to draw closer to their customers and fully flesh out, what customers are, as well as to take ownership of those solutions. They also continue to sit on large stores of cash, elected to return cash to shareholders. TBR that an increase in merger and acquisition activity is possible during half of the year, especially as vendors expand their portfolios in areas like cybersecurity and healthcare IT. Diversification also drives M&A activity in the last half of the year. Vendors seeking to move into previously untapped commercial markets with their cybersecurity solutions. And that concludes our presentation on the key takeaways from our IT Services benchmark for the second calendar quarter of 2012. Before taking questions, I'd like to briefly mention some of the other areas that public sector IT Services research program program we'll be exploring in the coming months. Syndicated company reports, as well as within our quarter benchmark study, we will continue to track and analyze drivers of revenue growth and margin performance for the companies that we follow, strategic actions taken by these firms, adjust to the market conditions, how these are leveraging alliances and acquisitions, how these are managing their human resource base, and what market segments are being targeted for growth. We are ordering additional research programs such as cloud computing, cybersecurity, and opportunities for U.S.-based vendors in the public sector to serve clients in international or commercial markets. Thank you for joining us today, and open the floor for questions.
Thanks, John, and thanks everyone for bearing with us with that audio difficulty we had. We've had a couple questions come in. I'd like to encourage anyone who has any additional questions for John to answer now. The first question we have is, you mentioned an array of vendor actions and responses to cope with the current environment, but what are companies doing new or differently in terms of business development?
Thank you for your question. With the uncertainty in the market, contracting managers and executives we're finding are focusing on honing their strategies to win new as well as repeat business. And it's to the point where having a robust portfolio of products and services, while still critical, is not enough. You also have to focus on improving the overall business development process, and we believe that has become equally critical. For example, the last 18 or so months, we have observed several companies implementing new technologies such as new CRM systems to their business development process, as well as making other types of capital investments such as some new processes, tools, and training, for example, for business development professionals. As part of improving the business development process, we observed companies making efforts to improve the proposal generation process. Have cited this as an ongoing initiative, and some indicated to us that this is an objective that they will launch within the next several months. We still see that area struggling to find ways of reducing proposal costs and improving efficiency of the proposal process without reducing win rates. Some have responded by their recruiting process. They've sought to recruit highly experienced proposal professionals who have demonstrated track record of success, who, for example, could replace 2, 3, or even more members of the current proposal staff because of their experience. We've observed companies employing a just-in-time kind of approach to proposal staffing to reduce the time that proposal teams are on the bench. So I'll mention that we've also observed increase in the use of virtual teams and teletuning, which we assume is being done primarily to reduce travel and lodging costs, and a trend that we see increasing in 2013.
Great, thanks, John. The next question had come in as, what trends are you seeing around acquisitions?
Yes, for your question. In the quarter, the level of M&A activity held steady from the previous quarter, from the first calendar quarter of the year, and was also consistent in terms of the competencies that folks were acquiring. The biggest news during the quarter, in our view, was T's acquisition of Max IT, its footprint in the healthcare IT space, which I believe will begin to accrete to their top line in the calendar quarter of this year. I'll also note the acquisition that Dell made of Quest Software. Its software business in the areas of systems management, I believe data protection, workspace management, and security across all industries. Also had a fairly robust public sector practice within the company that we believe is going to enable Dell to gain ground in at least the software side of their public sector practice. The number of additional acquisitions during the quarter appeared to be focused on the cybersecurity space, but we did note a handful of other acquisitions to acquire capabilities and mobility as well as in other software areas. Looking at acquisitions from an organic and inorganic growth perspective, we didn't see a major impact on growth rates during the quarter as a result of over the last year or during the quarter. Take this, the average growth rates for statutory, which is total top line growth, and organic growth were negative. Statutory growth rate being, I believe, negative 5.4%, which was only 170 basis points higher than the average organic growth rate during the quarter for the companies, which was negative 7.1%. I'd like to comment on the potential sequestration on M&A activity. We think that because sequestration would only really inject greater uncertainty into the pace and likelihood of contract awards in 2013. This would in turn have a negative impact on the valuation process and extending the time that it takes for buyers and sellers in an M&A interaction to reach an agreement. Ergo, we believe that sequestration would diminish the pace of M&A activity were it to happen. I still believe that companies are on the hunt right now for tuck-in acquisitions of cybersecurity, health IT, energy, cloud computing, and IT modernization, both here in the U.S. as well as abroad. I'll cite the overseas M&A activity, an example of overseas M&A activity on the part of Arthur Brumman, who's active of the Australian cybersecurity company, M5 Network Security. We will be integrated into their information systems business unit over the next several quarters.
Great, thanks, John. The next question we have that's come in is there's a couple actually that have come in, John, so I'm going to try to translate this as best I can. There's been some interest around firms that are not U.S.-based, particularly offshore vendors. And so can you talk about some examples of what companies are doing outside the U.S. in public sector?
Well, I mentioned the success that Accenture is having in the health IT space. We've also seen, for example, Allen Hamilton launching operations in the Middle East and Abu Dhabi during the quarter. This was following a year-long effort to bring together the right team of experts in areas of cybersecurity, as well as strategy and organizational consulting. And it seemed almost immediately after they went live, they managed to land an award with Saudi Navy. I know that comes to mind, and we can certainly follow up with them should the audience request that. The Lockheed Martin's Information Systems and Global Services Group won a handful of ISR-related awards in Europe. I believe one was in the Nordic region and one was in Italy. In addition to Accenture, I'll also call out IBM Global Services, who's been leveraging their analytics capabilities as well as their Smarter Planet solutions to win public sector awards across the globe, mostly in Southeast Asia.
Great, thanks, John. At this point, we don't have any additional questions. So what I have to do is thank you, John, for taking the time to do the presentation, and thank you, everyone, for joining us and your questions. Enjoy the interaction, and we look forward to continuing this dialogue every quarter. Before you sign off, I'd like to encourage you to follow Joe as well as TBR at the Twitter handles listed here, and also to remind you to check out our SlideShare and YouTube pages for this presentation as well as other presentations. I'll leave the chat function open for another few minutes in case anyone has any last-minute questions or would like to set up additional conversations with John around what's happening in the public sector. And we look forward to speaking with you all again next week and you all to vote today. So have a great afternoon, everyone. Thanks very much.